Ever looked at a stock chart and just seen, well, chaos? A jumble of lines and colors that make zero sense? What if I told you that by the end of this, you'll start to see a clear story instead of just noise? Let's dive in.
So you stare at one of these things and it looks like a total mess, right? It's a feeling we've all had. But somehow the pros seem to see a clear narrative in all that chaos. How do they get a feel for where the price might be heading next?
Well, the secret is actually simpler than you might think. They've learned to speak the market's language, and that language is written visually, right there on the charts. Once you learn to read them, the chaos transforms into a clear story, a story about the constant battle between buyers and sellers.
All right, so to get our feet wet, we're going to start with the most popular, most intuitive way to see this story play out. It's the chart that almost every trader uses, and for a really good reason.
This is the candlestick chart, and here's why it's so great. Think of a simple line chart as just telling you the final score of a game. A candlestick chart, on the other hand, gives you the whole highlight reel, where the price started, where it ended, and the highest and lowest points of the action. It packs a ton of information into one simple little shape.
Okay, so the absolute key to all of this is understanding the basic building block. Before we can read the whole story, we've got to learn to read a single word, and for us, that word is the candlestick. So let's break one down.
Every single candle has three key parts. First, you've got the thick part. That's the body. It shows you the range between where the price opened and where it closed. Then you have those thin lines sticking out. Those are the wicks, and they show the absolute highest and lowest prices that were hit. And finally, the color. The color tells you who won the fight. And here's the best part. The color coding is super simple. If the candle is green, we call that bullish. It means the price closed higher than it opened. The buyers were in control. If it's red, it's bearish. The price closed lower, meaning the sellers won that round. Easy, right?
Now, here's where it gets even more interesting. The size of that body, it really matters. A big, long green body, that's some strong, confident buying right there. A long red body shows intense selling pressure. And what about a tiny little body? Well, that often suggests indecision, a real tug of war where neither side could.
All right, so we've got one candle down, but a single candle is just a snapshot, right? It's just one moment in time. When we start stringing them together, that's when the real story emerges. They form patterns and reveal the market's overall direction, or what traders call the trend.
When you see a chart that looks like it's climbing a set of stairs, that, my friend, is an uptrend. Each peak, or high, is higher than the last one, and each little valley, or low, is also higher than the one before it. This pattern is a clear sign that buyers are consistently in the driver's seat.
And you can probably guess what the opposite looks like. Yep, a downtrend. It's just like a staircase going down. You'll see a series of peaks and valleys, but each one is lower than the last. This tells us that sellers have the upper hand, and they're pushing the price down.
But here's the thing. Markets don't just go straight up or straight down. A lot of the time, they just move sideways. They kind of bounce between this invisible floor, which we call support, and an invisible ceiling, known as resistance. It's a period where buyers and sellers are basically in a stalemate, waiting to see who makes the next big move.
Okay, this next point is absolutely crucial. Perspective is everything. The story a chart tells you completely changes depending on the time frame you're looking at. A day trader might be focused on 1-minute candles to catch tiny moves, while a long-term investor is looking at weekly candles to see the big picture. They could be looking at the exact same stock and seeing two totally different stories.
So we can see the price moving, but how do we know if it's a real move? You know, a move with some oomph behind it. How do we gauge the conviction? For that, we need to add one more critical piece to our puzzle.
And that piece is volume. You'll usually see it as these little bars at the bottom of the chart. Simply put, volume tells you how many shares were traded. Think of it like applause at a show. A big price move with huge volume, that's a standing ovation. It shows massive agreement. But a big move with tiny volume, that's like one person clapping in an empty room. Not very convincing, is it?
So here's the practical takeaway. If you see high volume during a price move, that helps confirm the trend. It's like the market is shouting, "Yes, we believe in this." But if you see a big price move on really low volume, that can be a red flag. It suggests the move might be weak and could run out of steam.
And just like that, we have all the core pieces. We've got the individual words, the candlesticks. We have the sentences they form, the trends. And we have the exclamation point that adds all the emphasis, the volume. Let's put it all together.
So let's quickly run through your new chart reading toolkit. First, you look at the individual candles to see the minute-by-minute battle.
Then you zoom out to see the overall trend they're forming. Are we going up, down, or sideways? Next, you look for that floor and ceiling, support and resistance. And finally, you glance down at the volume to see how much conviction is behind the move.
See? By combining these really simple elements, you've basically learned the grammar of the market's language. Those charts, they're not just random noise anymore, are they? They're a narrative, just waiting for you to read it. So the only question left is, what story are you going to see?